Steve Sosnick here with today's Interactive Brokers Midday Market Update for Friday, May 29th, the last trading day of the month of May. And what a couple of months it's been. Depending on your index, let's say we're up a third over the last 2 months, which is a remarkable rally, 33% by an over 2 month stretch, and I'm oversimplifying a bit, is insane. That would rank as one of the great bull markets of all time. Of course, we're coming off one of the more remarkable drops of recent memory, perhaps of all time. And so coming from an oversold condition, combine an oversold condition with unprecedented amounts of monetary and fiscal stimulus, and you have a very successful couple of months. Someone, really asked me what might be the risks to the market going forward. Number one would be some sort of diminution of Fed stimulus. Now, the Fed has given no indication that they're going to withdraw the monetary stimulus at any point, but it does appear that the Fed balance sheet is increasing at a diminished rate, still at a good clip, mind you. But if you want to think about it this way, the second derivative seems to be falling, right? The first derivative is if you look at a graph, is your slope. The second derivative is the rate of change. And so the rate of change in the Fed balance sheet seems to be slowing, not in a meaningful way, not in any way that's necessarily worrisome about the Fed stepping back, but that would be something to think about. Number two would be a withdrawal of fiscal stimulus. I don't see that happening, although I think, as I've alluded to in various columns, a surprising amount of the fiscal stimulus found its way directly into the stock market. I don't think that was the intent. I think that was just really an unanticipated benefit if you're a stockholder. But seeing all the new accounts that got opened around the street, including our firm, all the new investors putting money into the market, you take $1 trillion+ that went directly into the hands of individuals, and what appears to be a large amount of that, I'm just going to estimate, call that a third. That's still, $300 or $400 billion flowing into the stock market in a very good clip. At the same time that there's monetary stimulus, it's not surprising. It also is not surprising that the concentration seemed to be in names that people know. If you're a new investor, think about where you put the money. If you're not a new investor, put yourself in the shoes of a new investor, and someone handed you some money to invest, where would you put it? Well, big cap, index mutual funds, which are heavily weighted to the largest household names, or those large household names such as an Amazon, an Apple, a Microsoft, the type of stuff that people know. My concern here is that we've seen the biggest jolt of that right now. That money is in the market, potentially successfully invested, seems to be. But my other question is how much of that money will be needed to pay bills. So if that source of funding has essentially ended, and now actually has a potential to reverse somewhat, that would be one concern. The third thing that could really upset the apple cart is exogenous factors. The China situation has turned into be a wild card. It's not a secret that most of the rally that we've seen has occurred during overnight trading sessions. In the beginning, I think a lot of it was, let's say, helped along by unsourced rumors, the type of which we saw when the market was rallying in 2017-18, of positive developments in the U.S.-China trade talks. I've always been very suspicious of those. I think now a lot of it is more garden variety. People notice a trend. If you talk about if the futures dip in Asian hours, you probably have a pretty good chance of selling them for a profit in U.S. hours. That's one of those trades that works great until it stops working. But right now, it seems to be working for a lot of people, and I think that takes on a life of its own. I think it's very interesting that a lot of the follow-through has not really occurred, for the most part, during U.S. trading. And so now, if you start demonizing China, and there's been a lot of negative talk on the U.S.-China trade side, And as I'm taping this now, a little before noon Eastern time on Friday, the president is supposed to be speaking about the U.S.-China relationship, and as of now, there is no time for it. Most likely, it'll be after the close, which adds sort of another degree of uncertainty into the day, which is kind of why the market seems sort of meandering around lower levels rather than having a real direction or a real impetus to bounce. But I think if you start to see exogenous factors like some flare up in the U.S.-China relationship, and don't forget that the Chinese hold a big heart here too. Part of the fiscal stimulus and monetary stimulus, but the fiscal stimulus has caused the U.S. government to need to borrow more money, and states and municipalities. Who's the largest single buyer of that debt? So if we antagonize the Chinese to a certain extent, it's not without risk. So there's a risk there. Also, I think, the president's comments about Twitter may spill back into other market-leading companies. Twitter is not necessarily a market bellwether in and of itself, but Google to some extent is, or Alphabet, but Google to some extent is. And my other worry is every time the president's kind of gone to war over something on the internet, Amazon has been caught up in it one way or the other. Hasn't really had any long-term lasting effect on Amazon, but it could be a distraction in the months going forward. So to sum it up, it's the end of a month, end of a great 2-month period. As of now, the trend still seems to be to the upside, although not without some bumps in the road. And I think that's actually healthier to have some bumps in the road. It never works all that well when it goes one way because it tends to reverse more in the other direction when it does. And let's see what happens. There's a lot coming out from Washington over the next couple of days. And presumably something could be coming out of Beijing as well. And we'll see where that takes us. In the meantime, have a great weekend. Bye-bye.